So one of the reasons why we offered this seminar is because since the unfolding of this program, which, believe it or not, it was signed by Congress, but it is an SBA program, but it's administered by the financial institutions. And I say financial institutions because some credit unions, along with banks, actually facilitated some of these loans. And we've all been waiting for guidance, and we've been getting it, but we've been getting drips and drabs of guidance, and it's added a little bit of anxiety around this program. So Falcassen's really here to help answer any of those questions. Hopefully you leave today much more relieved, you know, and hopefully I've taken away some of that anxiety and maybe answered some of your questions. So we'll get started. I'm Tammy Ordway, Director of Entrepreneurial Services at Falcassen. I'm a partner. We're a regional firm. We have offices in Dover, Ocean City, Maryland, and Rehoboth Beach. And I specialize in small businesses in and around Kent County. I have a passion for it. I was born and raised in Delaware, and I've always taken care of small businesses, and it's my passion. So certainly any questions that come up, and even if it's unrelated to PPP, I'd be happy to talk to you and answer any of those questions you may have. So the PPP program is definitely interesting, and it's been evolving, and there's some statistics on the PPP program that I thought I'd share with you before we get into the actual meat of it and go over the details. But this program expired, so it's done now. It expired August 8th. So unfortunately for those organizations that may not have applied or maybe didn't think they needed to at the time, this program for now, the way we know it, has closed to any new applications. And there was still money. There was still $130 billion available to lend out. So that either tells me all the businesses that thought they could apply did, and the money got out there to small businesses, which I'm happy for too. Because the average size of a PPP loan is about $100,000. So this tells me that this got into the hands of the right businesses, of small business. And I'm going to quote some stats, and this came from the home.treasury/gov. So if you go onto home.treasury/gov, you can get this information too about the PPP program. What's also on home.treasury/gov is the forgiveness application, the 3508, both the regular 3508 and the EZ 3508. And then there were several FAQs, frequently asked questions, that came out throughout this process, and those are on there too. But I'm really hoping what I do for you today is take all that information that's out there, which is just an incredible amount of information, and I'm hoping to condense it for you. And I also want to share with you what I'm hearing from our small business clients and what they're having the most challenges with, because I think all of you share similarities in some of these key components that you have challenges with. So the PPP supported 51.5 million jobs that went to 84% of small business employees. So this is good. This is really good. The spirit of the PPP was to really support small businesses, and I believe it did. Denise, our marketing director of Falcassen, put the link in the chat. So if this is something you want to look into later, you can certainly do so. The top 6 industries that received the PPP funding was healthcare was number 1, professional and technical services, construction, manufacturing, retail, and food. So that was the top 6 industries that received the loans. The loan closings were 5,212,000, and there was a total of $525 billion of PPP loans. So huge. Also, this program is available to nonprofits, which was good. Nonprofits are suffering because they can't have the normal campaigns they have, and they can't have the normal events they've had. They've had to cancel their in-person events and go to virtual, and some of them just haven't been as successful, and giving's gone down. So they got approximately 34,000 loans at $4.6 billion. So it really did help the nonprofit sector too. But again, that program is now closed. So let's get into the meat of the program. The way it was originally designed is that they were going to give relief to small businesses, and they were going to do it over this 8-week period. So you applied for your loan. There was a formula used to calculate what you could qualify for. You got your money, and then you had a small 8-week window to use it. And you had to make sure that you didn't drop in FTEs, or you didn't, and that's full-time equivalent, and that you didn't drop in what you paid your employees too. Well, now that program, that 8-week period has been extended to 24 weeks. So a much larger time, or December 31st, whichever one occurs first. So a much larger expanded time period for you to qualify for forgiveness. And I'm really in favor of this, and one of the reasons why is because we had a lot of clients that were stressing over being able to spend that money in 8 weeks, and now they've been given 24 weeks to do it. So I feel confident that as long as the companies haven't dropped in your FTE count or paid your employees 25% less than what you were paying before, this application is going to be pretty streamlined for you. You're going to be able to use the EZ, and you should expect 100% forgiveness. But we'll go into maybe why you would experience a reduction. A couple other things to point out, like a quick date is if you got your money after July 16th, then you still are going to have to meet the requirements by December 31st, no matter where your 24-week falls. So I just don't want to give you the impression that if your 24-week falls into February, you can go into February. December 31st, no matter what, is the period for evaluation of whether you qualify or not. So hopefully you can take full advantage of the 24-week. We received a new owner cap too. So great thing was that owners were included in this, because small businesses, especially those that are sub-S corporations, often employ their own owners, and to back that out would have been detrimental. But luckily, they were allowed. So the new cap, owner cap for 24-week is $20,833. So that's a nice amount for an owner cap for that period. Once you apply for forgiveness, the lending institution, your bank or your credit union, has 60 days to render a decision. This is a quick turnover. And we have talked to several of our local institutions. We've talked to Shore United, WSFS, M&T, the credit union, and most of them, with the exception of WSFS, which I just saw a link that just came out yesterday to apply or start the process to apply for forgiveness. The other institutions said that they're holding off. One of the big reasons why they're holding off is that we were hoping Congress was going to vote to do an automatic forgiveness of anyone who received a loan of $150,000 or less. This is a majority of people. It would have really streamlined the process. You wouldn't be going through any kind of FTE calculation or drop in wages. It would have been so streamlined. Well, unfortunately, as of today, we do not have that vote, and quite frankly, we don't know when. It has received bipartisan support, so both sides favor it, but right now, Congress did reconvene, but it was only to address another matter with the Postal Service, and I did not see where this was on their agenda. So, but here's still my personal thought, just to give you my opinion, and what I am seeing from some lenders is that they're trying to give the message of, you don't have to do this right away. Really, whether you do it today or you do it 3 months from now, your calculation's really not going to change much, or it might just get better. You actually have 10 months to apply for PPP forgiveness after your covered period has ended. So you've got quite a bit of time. So I know the tendency is, I just want to get this over with, but I hate to see you go through all that work and then Congress maybe a month or two votes to go ahead and do automatic forgiveness. So, personally, I'm going to probably do more of an aggressive reach out to clients come Q4. Might be time, the end of October, beginning of November into December to apply. That way you're not dealing with this at the same time of trying to close your books at the end of the year, get your payroll done, your 1099s. We got enough as business owners going on in January. So, maybe helping with forgiveness in Q4. So let's talk about a couple terms. Let's talk about covered period. So a covered period, again, is this 8-week or 24 weeks, and you count it from the day you got your money. So the day you got your money, and then you count out the 8-week period, which is 56 days. So you actually have to do it on the 56th day is when your period is, or then you take the 24, which I think is 168 days. I'll come across it somewhere. I want to make sure I quote you right. But anyways, you take that time period, and that's your covered period. Now, there is, and let me get to it, go over it now with you. There is an alternative payroll covered period. And what this means is that you can make your 8 or 24 week float. So basically, let's say, let me give you an example, because I love examples and I learn more through actual examples. Let's say I got my money on April 1st, but I didn't have my first payroll to April 5th. Well, guess what? You can actually start your covered period on April 5th, April 1st. And again, strategically, you may need this. Maybe you're really close and you need that pay period to be included. So if that's the case, you're going to pick an alternative covered period rather than the strict covered period of 8 or 24 weeks. Now, on the back end, let's say you have a payroll that your period says, well, you end on Monday, but your payday is Friday, and it includes those days that were in the covered period. They allow you to take that date too. So you can take on the front end and you can delay it a few days, and then on the back end, you can extend it, but you can only extend it to that first payroll that you would have outside of your covered period. You can't go beyond that first payroll. So I just want to point that out because I do have come across a couple clients that strategically it would be better for them to pick the alternative covered payroll period than the covered. So just know, for administrative purposes, you can shift that based on when your payroll was. It's really as simple as that if you need it. I would even use it if you don't need it. If you've met all your requirements in 24 weeks, then you don't even need it. So let's talk about what would cause a reduction in your forgiveness. So we're going to spend quite a bit of time on this because this is big. And there are a lot of exemptions and strategies, and it's my job to help you get any of these strategies or exemptions so that you're getting maximum forgiveness, because the true spirit of this really was to help small businesses, and so we want to make sure you're getting maximum forgiveness. So first we're going to talk about your FTE count. That stands for full-time equivalent. So we're going to talk about that, and if you did have a reduction, it could reduce the forgiveness. And then we're also going to talk about if your payroll dropped 25%. So if any of your employees had a 25% decrease during this time, we're going to talk about that too. So basically what happens with an FTE is, let's say at the beginning of the period, you had 4 FTEs. And now during this covered period, you have 3. You've actually had a drop in FTEs. We'd have to do a mathematical calculation, and we would take that calculation and apply it towards your loan, and you could have a little bit less forgiven. But here's some important strategies, and we'll talk about these a lot. We'll bring them up constantly. If an employee was fired for cause, if they voluntarily resigned, if they were asked and granted a reduction of hours, or if you gave them their job back, a written offer, and they refused. Those are all exemptions to the FTE. So that's really important, because I've talked to several clients that have had some employees that have just resigned. Some people just aren't comfortable anymore and they resigned, and they said, well, I think I'm just going to retire. All of those qualify, and those are exemptions. And so if you were 4 before and now you're 3, but one of those was an exemption, you put 4 on the application because you did not receive a reduction in your FTE count at all. So this is big, and that's why we're going to go over it and keep talking about it. And I'm actually going to reference you to the application itself so that you can make a direct correlation between what I'm saying and the application. So again, we'll come back to that. I just want to give you a highlight of what may reduce your forgiveness. The second reduction point is if an employee had a 25% decrease in their salary. Now, I'll watch the chat because I am curious. I've given a lot of these seminars, and almost no one has said that they're going to have a 25% decrease in salary or wages. I've had one, and I'd say it's been mixed. About 40% of attendees have said that they will have an FTE drop, but then once I gave them the exemptions, and then we're also going to talk about a safe harbor rule too. Once I gave them that, they said they thought they were going to be fine. So I really want to get a gauge, because when I give these seminars, I want to make sure I'm really addressing the issues that are really out there. So the 25% decrease in salaries is over the covered period. So again, we're going to keep, talking about this covered period. And now you don't have to worry about this if you have the inability to hire similarly qualified employees. And then also, and you might say, when would that ever come up? Well, it's actually shockingly pretty popular, because think about it before. Our employment market was really healthy. And I heard so many clients saying, I'm having a hard time finding good, reliable help or qualified people. And so that market hasn't really changed. We were in the middle of that market. And then also what's happened too is maybe you've had some people that resigned and they were highly qualified. They were at a certain level. They had a certain job description, and you just can't find that candidate. You fit into that similarly qualified employee, and that would be an exemption. Also, another key is if you have had the inability to return to the same level of business activity as resulting of a government mandate, which right now we still are under phase 2. So that is a mandate, and we do have some restrictions. So in that case, you also would meet the safe harbor rule, and again, we'll go over that. So kind of tuck back. I've thrown a lot at you. So here for absorption, kind of tuck in the back of your mind, okay, my FTE count, but I do have several exemptions. What if I haven't been able to restore to my same level of business activity? And then also think about, has anybody dropped greater than 25%? Okay, so we have a question. One of our attendees of the seminar today works at a funeral home, and over half of our employees are part-time, and they work funerals and viewings. The number of cremations has drastically increased, so we did not need as many folks to work viewings and funerals. Okay, so very good question, because in your case, what I'm hearing is the drop in FTE. Now, the IRS, for the purposes, or I should say the SBA, for the purposes of FTE count, is letting you round up anyone to a half, to a 0.5. So it depends if they're working less hours or if they're not working at all. Now, let me ask you, Tom, has the funeral home been affected by government mandate? Like, are your operations restricted? So, for example, the amount of attendees of a funeral are restricted. Because if you're restricted at all and you're not at the same business level activity, then in your case, we would be helping you make an argument for the safe harbor rule that you meet that because you've been unable to return to the same level of business activity. So we'll come back to that, Tom. We'll give you a chance to send in your chat. We'll come back to that. All right, so let's talk about this average FTE. Let's go back to the FTE because it's so important. And then let's talk about the safe harbor rule, because I believe most people are going to fall under the safe harbor rule. So the average FTE, again, you have to look at it during your covered period. And again, covered period means 8 week if you elect. That means you had to have received your loan before June 4th, or your alternative covered period, and that was that administrative idea I gave you, whereas if you got your loan on the 1st and your first payroll wasn't until the 5th, your covered period starts on the 5th. And then in addition, you can do the 24-week instead of the 8-week. So when I say covered period, just keep in your mind 8 weeks or 24 weeks. So what the SBA is saying is that you have to look at your FTEs for your covered period, and then you have to divide it to see if you've had a drop. And if so, then we've got to do a mathematical formula to see how much your forgiveness is going to be reduced by. But again, there is an FTE reduction safe harbor. So now let's talk about the safe harbor, because this is so important, and I think so many people are going to fall under this. There are 2 separate safe harbor exemptions, and if you want a reference for this, if you go onto that same site that we told you about and that Denise in the chat gave you a link to, if you go to Form 3508, page 5, you'll see what I'm referring to with safe harbor. So there's 2 separate safe harbor exemptions that may help you prevent any kind of reduction of your forgiveness. So here's the first one. You're exempt from a reduction of FTEs if, in good faith, you're able to document that you're unable to operate between February 15th and the end of your covered period at the same level of business activity as before February 15th. And this is due to a government mandate, which we are under a government mandate. So let me give you another strategy in this area, because you might say, well, starting February 15th, I was seriously restricted. And then my covered period, though, if it's 24 weeks, that's almost a half of a year. And you might say, well, now I'm under more normal business operations. And again, remember, your covered period doesn't start February 15th. Your covered period starts the day you got the money. So let's say you didn't get your money until April 1st. So then your covered period could be as quick as 8 weeks, which would be April and May, or it could extend beyond the 24-week period. So here's your strategy. You may want to adopt an 8-week covered period if you're going to meet this safe harbor rule. Now, here's another thing that's going to help you even more, though. As long as you restore your FTEs by December 31st, then you're fine. You're completely fine. You don't have to worry about any of these exemptions. You don't have to worry about the safe harbor. So they are giving you December 31st. So let's say your 24-week covered period ends October 15th, and you still quite aren't there, but you're in a business that you're going to ramp up for the holidays, and you know you're going to be there, then you're going to be okay, because December 31st is when you have to restore. Now, I talked about 2 requirements of the safe harbor. Here's your second exemption. You are exempt from a reduction in loan forgiveness if both of the following conditions are met, and you reduced your FTE from February 15th to April 26th. And who didn't? Most people did. So again, you dropped your FTE from February 15th to April 26th. Now, to give you a time frame, I believe we started having our shutdown somewhere around March 14th, I believe. Don't quote me exact. So you're already a month into it. And, not an or, and the borrower then restored its FTE employee levels no later than December 31st. So again, if this affected you, you dropped your FTE between February 15th and April 26th, but you've restored it by the end of the year, you are going to meet this safe harbor exemption. So I've given you a couple ideas on the FTE reduction. So let's say your FTEs did legitimately drop. One of your strategies is going to look into the employee records to see, did we let anyone go for cause? We have to document that. Did anyone resign? We need the resignation letter. Did anyone request and we actually honored a reduction of hours? Or was anyone given an offer to come back to work and they refused? So all of those exemptions are going to help you. Also, too, related to what we were talking to Tom with, and we'll get back to his answer, is if you have been unable to restore your business operations. There you go. That's an exemption. Now, if you don't meet those, then we're going to go to the safe harbor, and we're going to see them, again, about the reduced operations for that time period. That's between February 15th and the end of your covered period at the same level of business activity on February 15th. And then also, too, the second exemption, don't forget, is that you dropped. Remember, you dropped between February 15th and April 26th, but then you restored your employee levels by December 31st. So I wish I could tell you this was just standard, real quick and easy, but as you can see from what I've just taken you through, it's a little complicated, and for anyone that's had a drop, we're going to have to really look at the detail of their situation and see if we can figure out any of these exemptions or the safe harbor rule to apply. So let's get back to Tom's question. Not sure if it was government restriction, but we had to come back a lot on the number of folks who can enter the chapel to view their loved ones. We're also asking that once they view the body, they leave rather than gather and talk to friends and relatives. So we can certainly, Tom, I'd say in your case, look into what that government restriction was. So yours is definitely hitting the complication of the FTE. So first, Tom, I think we'd have to look at, do you have any exemptions for those part-timers? Again, I would even say that we can make the argument that although, let's say you were permitted to open, I know you did have restrictions on gathering, though, and I don't know if you're still subject to that 50 or under. And if you are, and I'm almost sure you are, because we're in phase 2, if you're still restricted, then in this case, you're going to meet that safe harbor. But let's say we really dive into that. We're not quite sure about that. One thing, too, Tom, we should look at is if you have any exemptions at all that are possible. Did any of them resign? Did you fire for cause? Did they ask for a reduction of hours? You know, those kind of things. So, Tom, you definitely are going to require some looking into and seeing what kind of strategies can be applied. We can certainly help you with that because we want you to get maximum forgiveness. We have another question in. Our 8 weeks ended June 19th. How can we apply for forgiveness if we have until December 31st to get our, great questions. You're asking, how can I apply when I have until December 31st to restore my count? That's exactly it. That's when you would not apply. You would not apply. So again, you are not mandated to apply for 10 weeks after your covered period, or 10 months, I'm sorry, 10 months. 10 months after your covered period. You have a lot of time, but no matter what, the clock, ticks, if you will, that's done ticking at December 31st. So great question, Keith. You're right. In your case, if you're waiting to restore, now if your 8 weeks ended June 19th, but if you have not met that FTE count, you're going to want to expand to the 24-week covered period, and then you're going to want to look at any of these exemptions or reduced operations to see if we can apply any of that in your case. And you may just have to wait. You may not be able to apply right away. And that's okay. That's all right. If anything I can stress to you guys is that you do not have to jump and do this right away. You've got some time. Matter of fact, I think this is the time now to educate yourself. And I'll give you a checklist of the documents that you need. I'll discuss that too because that's a question that's asked a lot. And because we're just now getting a link from one of the institutions and none of the other ones, I think a lot of this will be evolving, and certainly we don't want you gathering a bunch of documents that you don't need or won't be asked for. All right, so we talked about FTE, we talked about exemptions, we talked about the safe harbor. I think we went over that pretty good. Let's talk about this salary or hourly reduction of 25%. Maybe I'll go over it and then we'll see if any of you have it. I haven't seen on the chat yet where anybody feels like they have this, but let's go over it and then I'd be curious to hear from you to see if you're experiencing this. So if you have reduced any employee's salary or wages more than 25%, during the covered period or the alternative covered period compared to January 1st to March 31st, then you will possibly have a reduction in your PPP loan. So let me say that again. First of all, an employee has to be dropped more than 25%. And if they are, then you have to compare their wages between January 1st and the covered period. And then you need to compare that to January 1st to March 31st. So we need to compare your covered period, your alternative covered period, as compared to the January 1st to March 31st. Sorry if that's a little confusing. I know there's a lot of dates. Again, if you want to refer to this reduction, page 4 of Form 3508. And you might be asking me, well, I see this EZ out there. Tell me who can use the EZ. I'll go over that. But I find that the instructions to all these exemptions are much better on the 3508 form. The EZ form really leaves out a lot of these terms, I should say. So you will qualify to use the 3508 EZ if you had no employees at all. And some people actually got the PPP and didn't have employees. And one of the biggest examples is a Schedule C, maybe a photographer. And they just work on their own. They don't have any employees. They had a profit of 100 grand. They qualified for the PPP. They would be able to use the Form 3508 EZ. If you did not reduce your salary or wages by more than 25% during your covered period or your alternative covered compared to that January to March that we just went over, then you can use the 3508 EZ. And then if you did not reduce the number of employees, and again, that is FTE count that we spent a lot of time on. If you did not reduce the number of employees during your covered period, you can use the EZ. So those are the requirements for being able to use the EZ. So again, even though you had a drop in FTEs, if you have any of those exemptions or you meet the safe harbor rule, you qualify for the EZ application because technically, as far as the application goes, you didn't have a drop. So even though you may on paper have a drop, if you have exemptions, you get to bump those up and restore them. Again, my previous example was you have 4 and now you have 3, but that person resigned. You have 4. According to the application, you have 4. The nice thing is you don't have to, if you do an EZ, you don't have to attach all of that. But you do have to keep a certain level of documentation. So this is on the Form 3508, and actually Denise gave you a much more expanded link to the form itself. She's making it so easy on you. So you got a link to the actual form itself, 3508, page 6. So I've gone over instructions on page 4, 5, and 6. Talks about the cover period, drops in FTE, safe harbor, and the 25% reduction. So everything I've given you in a snapshot. I've also given you the source of the page that you can go to. If you really want some great nighttime reading and you can't quite fall asleep, go ahead and pull out page 4, 5, and 6 of the application. I know I have plenty. So let's go back to page 6, documents that each borrower must have. So again, you're not required to submit, and it even says on here, not required to submit, but must have. So let's talk about those. So first, you must document each employee. And here's why you want to have each employee. And let me give you a couple software platforms that are going to be able to give this to you, an example of them. So if you use QuickBooks or Intuit, QuickBooks has what's called a payroll summary. And a payroll summary you can do for any date. So if you use QuickBooks, you know you can do this. So you can do a payroll summary for your covered period or your alternative covered period. And then you can also do that same payroll summary for these other periods that we're saying you have to evaluate the pay, like the January through March 31st. So QuickBooks is going to give you what you need in that line A. If you use Paychex or ADP, I know from emails they've sent me, they have special PPP reports built, and I'm sure they're constantly evolving, especially when the banks do finally come out with these links, then I'm sure they're going to have those updated too. So again, you're going to be able to get these reports from your payroll provider or QuickBooks. All right, I think we had another question come in. What time frame are we to use to establish the FTE baseline? So that is a good question. Let me refer you back to the page on the instructions. Okay. So let me refer you to page 4 and 5 on Form 3508. First, we have to look at the FTE, and it says, and this is answering your question of time frame, this calculates the average FTE during the covered period or the alternative covered period. For each employee, then you would enter their average number of hours paid by week, divide by 40, and that gives you, like, hopefully a 1. That's a full FTE. So first you have to look at it for your covered period or alternative covered period. Then to secondarily answer your question, then you were saying, well, compare to. So then if we go to the safe harbor rule on page 5, then what you do is you go ahead and look at your FTE for that period, and then you look for it as before February 15th, issued before March 1st. So you have to look for it for that period, and then as long as you restore by December 31st of 2020. So you have to look at, you have to compare what your FTE was during your covered period and then what it was before that February 15th period. Now, they don't give us a range, but some of the seminars we've even been on says, take a look at January to February 15th, because that was considered when operations were still in full force. Then look at your covered period, and did we have a drop? Did we have a drop in that? All right, let me know if I didn't quite answer your question, but I think you were asking for time frames. And then also, oh, and I'm sorry, let me further elaborate on that, Dawn, just to clear that up too. That same page 5, reduction for the safe harbor. So if both the exemptions are met, and this again says borrower reduced its FTE employee levels for the period February 15th and ending April 26th, then it restored. So then it restored. So if you're looking to apply for the safe harbor, you may want to look at item 2 that, yes, you reduced from February 15th to April 26th, but then you restored. Now, again, you may have had a drop, and that's okay, but we need to see what exemptions you applied for that you can use and if you've restored it. So going back to like Keith, he's saying, well, how can I apply when I haven't restored it yet? That's exactly the point. You've got to wait to apply until you restore. So you have a little bit of time. I mean, we're September, we have 4 months left. There's going to be some strategies with this. I think you have to evaluate too. Let's say there's just nothing you can do about it. You've ran through all your exemptions. You don't meet the safe harbor. You don't have limited operations now. Again, it's going to be really hard not to meet all these exemptions and these safe harbor. But let's say you don't. Then I think you have to take a look at the actual physical mathematical reduction, see how much that's going to cost you in that loan, compare to then what would it cost me to restore. If I'm really close, so let's say I've dropped by 1 FTE and I'm going to have to pay back $3,000 of my loan, let's just say, but I can restore someone for X by December 31st. Is that strategically smarter for me to do? Some people are expanding. Some people took, a big hit and then they picked back up again and things are good, but they've had an inability to rehire. Remember, that's an exemption too, is the inability to rehire similarly qualified staff. So that doesn't mean you have to just accept anyone who's applying for a position that you've posted with your company. It says similarly qualified. The labor market was tight before. It still may be tight. So again, really strategically look at these exemptions, and that's where I think we're going to get a lot of FTE relief for you. All right, so let's go back and talk about the documentation. We talked about A and even B. So A and B, you're going to be able to obtain through QuickBooks, your payroll providers like ADP and Paychecks. You're not going to have to take 24 pay periods reports and add them all up together. You're going to be able to get this from your payroll provider or from QuickBooks. So item C, this is really important. Documentation regarding any employee job offers and refusals. Refusals to accept full restoration of their jobs, firing for cause, voluntary resignations, them asking for reduction of hours or work schedule. All of that's in your favor. You've just got to document it. Now, you don't have to turn it in with the application, but you got to have it in your file. So right now, if you're saying, well, I want to do something, start doing that. Go ahead and start doing that, especially if your covered period isn't over. Start gathering all of those items in letter C. And also, too, an inability to hire similarly qualified employees for unfilled positions. Huge. Talked about it several times, I know, but I really feel like a lot of you are going to get relief in item C here. And then D, documentation supporting that you're unable to operate between February 15th and the end of the cover period at the same level of business activity. So again, let me give you another strategy. February 15th, things just started happening, and it was mid-March that we were all kind of then shut down. We were under heavy government restriction. So think about February 15th and think about your covered period. You may want to adopt an 8-week. If, for example, you spend all your money, so your PPP money's gone, that's fine. You spend it all in either payroll or non-payroll, such as rent, utilities. There's a list of items. And I didn't spend a lot of time on that because that has been gone over so thoroughly before, but I'd be happy to talk to you after this seminar about qualified payroll and qualified non-payroll costs. But in context of this, strategically, you may want to adopt that 8-week period because you may have employed everyone because you had the PP money to do so. So you may not have dropped your FTE at all in that 8-week period. And remember, you could do a special election for an 8-week as long as you got your money on or before, again, I can't find the date exactly, but I think it's June 4th, but don't quote me, I think it's June 4th. So if you got your money before then, you may strategically want to adopt the 8-week. If not, and your FTE was restored either by the 24-week or you think it's going to be by December 31st, then go ahead and adopt the 24-week covered period or the December 31st. So that's going to be D. D is going to be to document that because everyone was under some form of inability to operate February 15th to the end of your covered period. And again, 8 weeks would have been April 15th, which we were still very heavy in our government restriction. And then E, document your safe harbor. And again, I think we've gone over the safe harbor enough. So I've got a little bit of time left. Please shoot me those questions if you have any, because we've got about 10 minutes left. I did want to briefly go over the 60-40 split on the application. So on the application itself, it's very easy. You have your name, your address, your EIN, contact information, your SBA PPP loan number, and you all should have that on your SBA document, and your loan amount. And then if you got an EIDL loan, EIDL was administered by the SBA, whereas the PPP was administered by the financial institutions. If you got an EIDL loan from SBA, you have to put down the amount you got in that advance, or it was called a grant, and it was $1,000 per employee, and it was up to $10,000. So let's say you got a $10,000 EIDL grant. You will have to reduce your PPP forgiveness by that amount of the grant. There's nothing you can do about that because it is kind of considered to be like double dipping. And so you can't have both that grant tax-free and then get forgiveness on the full PPP. So just keep that in mind, and that is on the application. Originally, when the PPP program came out, it said that you had to have a 75-25 split on payroll and non-payroll. They actually relaxed that to 60-40. But again, because we now have 24 weeks, I really think with confidence, unless you've just cut your staff down to nothing, I think with confidence, you are going to spend your money in 24 weeks. Because remember, the period originally was believed that employers only needed 8-week relief. Oh my gosh, none of us ever thought, that this would be going on into the fall now. I mean, I think we all thought it was going to be over if we just behaved. We all thought it was going to be over in a month or two. And it certainly hasn't happened. So that's why they changed the program to a 60-40 split. So payroll costs, just to give you, since we have time, let me tell you really quick what payroll costs are. Gross wages, not the FICA Medicare portion that you match. Gross wages are considered qualified payroll. SUTA, state unemployment tax, that's considered qualified payroll. If you pay for any of your employees' health insurance, now if they reimburse back, you have to net that. This would just be for the portion that you pay out of pocket. That's qualified payroll. And retirement matching funds are qualified payroll. So maybe you have a simple plan or a 401k, and you put 3% money into that employee's plan. That's payroll. Let's say you pay 50% of their health insurance. That 50%, it's payroll, gross wages, and SUTA. So if you still don't meet that, when you add all those together and you still haven't spent your money, then what we'll go to next is your non-payroll cost, which is your rent and any mortgage interest that you paid for a loan that you had to have on the books before February 15th. So most people, their business is rent, whether it's from the owner themselves or they rent from a landlord. And so your rent counts. But if you do happen to just have a building that you have interest on, that counts. But most people have a lease. And so you certainly want to make sure you check your files. If you think you're going to need to use non-payroll costs, you want to check your files to make sure you have those signed leases into place. And then utilities count. So electric, water, sewer, gas. Maybe you have a business that you have a lobby and so you have cable. Anything like that would qualify too. You just have to make sure that that doesn't exceed 40% of your forgiveness. So kind of ordering rules. First, we have to make sure we spent the money on at least 60% payroll, but it can be 100. And if you need more to spend on, you can use that 40% pot, that non-payroll. Once you make sure you've actually spent the money, which I don't think anybody's going to have a problem with spending the money in a 24-week period. Once you've made sure you spend it, then look at your FTE count and then look at your 25% reduction. So that's kind of the ordering rules for you. Right now, again, if you just don't think timing's such that you should apply, but you are anxious and you want to do something, then you can start looking at page 4, 5, and 6 of the instructions of the application. You can reach out to me. Initially, you can start gathering some of that documentation for anybody that resigned, limited operations, anything like that can help build your case to be able to get it 100% forgiven. That's our goal, is to have everybody's loan 100% forgiven. I think we had another question. If there is total forgiveness, what is the best way to show the grant and associated expenses on the P&L? Oh, yeah, great question. I initially had it recorded as a liability on the balance sheet. Yeah, so great question. You're absolutely right. Right now, all of you should have this loan as a balance sheet item. Have it as a liability item, call it PPP loan, whatever, but have it on your balance sheet. We are waiting for Congress to tell us that this is basically non-taxable. The original spirit of this was not to make it taxable. But in the documentation and what SBA has told us, they are not going to allow you to take the deduction for what you've spent the PPP money on. So let me give you an example. You got a $100,000 PPP loan, you spent all 100 of it on payroll, they're not going to allow you to take a $100,000 deduction. Basically what we're doing is we're throwing that money and we're putting it right on your P&L and we're adding a $100,000 income. That would be tragic, and that was not the original spirit of this. It has received bipartisan support. Congress intends to vote on this. They're supposed to vote on it when they reconvene. It is none of their intents to make this taxable. I mean, can you imagine? You did the right thing. You spent it on payroll, and now you're supposed to pay tax on $100,000. You don't have $100,000. It's gone. You did the right thing. it just would be, it would be tragic. And let's hope that they do what they promised us that they're going to do and vote on it. Now, flip side, if they don't, you're like, well, great, I'm allowed the deduction. I've still got this loan on my books, but it's been forgiven. So we believe, and again, we haven't gotten total guidance on this, we believe you're going to move that down to the equity section, and in some way, shape, or form is going to be hitting like your capital, retained earnings. So if you're a corporation, you have retained earnings. If you're a partnership, you have capital. So we believe we'll move it down from your liability account down to your retained earnings or your capital section. If it is not, if it is taxable, basically, then you're basically going to move it to your P&L. So we're going to have movement one way or the other. But for right now, keep it on your books as a loan, even if you did already or you are applying for forgiveness because you're all done, you're all wrapped up, you can do the EZ and apply for forgiveness. Still keep it on the balance sheet as a loan because we don't know yet if you're going to be permitted the deduction that basically we were, all promised. Great question. All great questions, and I tell you, some of them we just don't have answers for yet, but we are constantly on that site. We're attending seminars. We're getting the word out to you guys constantly. We're staying on top of this for you, and it's something we'll be keeping you informed as soon as we know of any changes. All right, no further questions? Great. Well, I promised you I'd give you a lot of good information, and I'd wrap it all up in an hour, and so I delivered. And again, thank you so much for tuning in. If you do have any questions, my email is TJO. That's my initials, TJO@fallcasson.com. Our phone number here at the office is 302-674-4305. Denise also put my email and phone number in the chat so that you have that information too. Don't hesitate to reach out to me. Right now, we're coming up on kind of Q4 in a month, and we're going to be moving into strategic tax planning, helping clients get through this PPP forgiveness. And again, we're kind of running two tax planners. What if Congress doesn't vote that you can take the deduction? And what if they do? It's kind of going to be like Planner A and Planner B. And Q4 is the time to get yourself familiarized with it rather than February. That's a hard time to employ any strategies. Let's work together, in Q4. So again, thank you all so much for tuning in, and we'll hopefully bring some more information to you later. Thank you.